Imagine an indicator that not only automatically draws trend channels but also identifies candlestick patterns precisely in those specific regions where the price tends to react. This means that instead of having to manually search for support, resistance, and various candlestick patterns, the indicator itself conveniently displays these signals directly on your chart. And today, I'm going to introduce you to the Channels with Patterns indicator developed by ChartPrime. This powerful tool skillfully combines trend channels with candlestick patterns to help you pinpoint potential entry points within the market. If you like strategies based on price action and market structure, this indicator could be very interesting for you. So let's go straight to the chart. The first thing you need to do is open TradingView.com and choose an asset to trade. I'm on the Euro USD, but you can choose crypto, Forex, stocks, indices, whatever you prefer. I'm currently on the 15-minute chart, and this indicator functions effectively across all time frames, starting from 5 minutes and above. The primary function of this indicator is to rapidly identify and outline clear trend channels on your chart. It employs price pivots and ATR-based volatility to estimate precisely where the price tends to fluctuate within a channel. But the channel isn't the only special feature. The indicator also looks for important candlestick patterns like engulfing or hammer, and it only shows these patterns when they appear near the channel's edges, where price reactions usually occur. So how exactly do we go about adding this indicator to our chart? We need to navigate to indicators and then search for channels with patterns. Exactly as I've written, it's this ChartPrime option right here. Just give it a click and it will show up on your chart just like it's displayed on mine. Now let's understand a bit about what the indicator has. Inside the channel it will have an upper line, a lower line, and sometimes a central line. The upper line acts as resistance, meaning when the price touches it, it tends to fall sharply, while the lower line functions as a dynamic support. The price hits this point and tends to reverse, moving upwards. The candlestick patterns it usually highlights include EG, which stands for engulfing, and H, which represents a hammer. These signals only appear when the price is touching or very close to the edges of the channel. This serves as an additional confirmation of a possible reversal, but you don't have to rely solely on them to trade within the channel. It also provides signals for breakouts. When the price fully breaches the channel, alerts such as breakup or breakdown will appear. This indicates that the price might be starting a new trend or a strong move. So it's wise to exercise caution during such times. As for its settings, we don't really need to adjust them because the default configurations are perfectly suitable for the majority of traders. Now let's understand here how we could identify and take buy or sell operations. But before we move on, many of you often ask me which brokerage platform I personally use for trading Forex, stocks, or cryptocurrencies. And the answer is EXNESS. For me, it's truly the best and most comprehensive broker available in the market today. If your brokers ever annoyed you, you'll get what I'm saying. Many brokers have slow order execution. On EXNESS, trades execute instantly. Other brokers often charge extremely high spreads. At EXNESS, the spreads and trading fees are incredibly low, among the absolute lowest you will encounter in the market. Ever waited days to receive a withdrawal? With EXNESS, the money arrives almost instantly. And best of all, you can adjust the leverage to be almost infinitely as you like, obviously controlling your risk. So if your broker freezes, charges a lot, or takes forever to pop, if you're paying, it's really time for a change. The link will be right here in the description, and as I mentioned, I consider it one of the best brokers with the lowest market fees. For instance, observe here, it previously displayed two parallel channels, specifically a small uptrend channel and a small downtrend channel. How will I determine which one holds the most significance? I will introduce an additional indicator, specifically an exponential moving average. I'll navigate to moving average exponential and then I'll place the moving average on the chart. Now I'll go into the settings here and I'll change it to 200. And I'll also change its color to white so that it becomes clearer and more visible for everyone. Therefore, in this particular situation, observe closely. The chart is operating above the white moving average, which clearly indicates that the overarching macro trend is upward. So we prefer the uptrend channel, which is formed by the indicator, and also those touches that happen on the lower section of this specific channel. Observe at this exact moment how the price moved out of the channel, then returned back within its confines. Right here it formed an engulfing pattern, check it out. It didn't explicitly mark it here, but it was indeed a strong bullish engulfing. Therefore, in this scenario, we could have initiated a buy order right here. This purchase would have been executed precisely at the completion of the candlestick. Typically, we set the stop loss just beneath the last low at 0.11 and our profit target is twice that at 0.22. The price swiftly reached this point, subsequently attempting to climb towards the upper channel. Now observe the distinction in the downtrend, and if you wish to track my real-time analyses, I also operate a complimentary group on Telegram. In that group, I conduct some live trades, perform market analysis, and share emerging opportunities that come up throughout the day. So if you want to join, the link is here in the video description. Additionally, the pinned message includes instructions on how you can learn to execute trades directly with me. Simply click the link provided here. The group is entirely free to join. The price has now gone below the white moving average, and it's consistently creating both peaks and troughs beneath that very same line. Therefore, our focus now shifts to favoring the established downtrend channel, and we will be looking to initiate sell positions within the designated green zone. So what exactly are we going to be waiting for? We're going to wait for the price to show us a clear reaction when it reaches that green zone. The price has now reached the green zone and showed a reaction here with this red candlestick, allowing us to place our sell order. Upon the candlestick's closure, we set our stop loss slightly above the last high, approximately at 0.12. Our target, 2 times that in the downward direction, was 0.24, and it quickly reached this point, trying to hit the lower part of the channel, boosted by the strong prevailing downtrend on this chart. Although it is an interesting indicator, it really shouldn't be used by itself. You should also utilize support and resistance as well as other indicators for confluence. If you found this indicator helpful, be sure to subscribe to the channel and enable notifications so that every time I upload new content, you will always be notified first. Also, please hit that like button, it really helps the channel grow and encourages me to bring more videos like this for you. Comment with more indicators if you want to see additional practical and easy to use ones like this for your daily trading. And remember, this content isn't investment advice nor a recommendation to use the indicator. The financial market is risky and you can lose money, so before you trade, be responsible. Thanks and see you in the next lesson.